This is Vincent, and I am very happy to bring you the very first accounting tutorial video here on the YouTube channel. It's going to be on basics of accounting. Today we're going to talk about the balance sheet. We're going to talk about the income statement. We're also going to talk about specific entries that happen on the balance sheet and income statement with some basic bank transactions. I want to teach accounting to everybody that's like either accountant or a bookkeeper or just happens to be interested in the field, because there's a lot to teach individuals on how to do it right. And so as you can see from this description over here, I have over 2 decades of accounting experience. I've been an accounting consultant for about 5 years now, and I have many different clients. I've worked both in private as well as nonprofit sectors, and so I know a lot about accounting. Now, I don't know everything there is to know about accounting. Accounting is a very broad field, but I have a lot to teach on the subject. And so another thing about me is that I have formed and moderate a Facebook. Let's see here, getting my grammar correct. I formed and I moderate a Facebook accounting group with over 19,000 members. The link is in the description on this video. I've also created this remote accountants channel as well that you're on right now, and it's growing every day. A lot of accountants have reached out to me either for job opportunities or just to get more information about accounting. I am available for private accounting, bookkeeping, consulting. If you want like tips on getting clients or tips on accounting, I have a lot of experience, again, over 2 decades, so I do know a lot about how to get yourself out there. You can contact me by personal message on Facebook or on my group or channel. So that is private consulting, so it's a little bit separate and apart from the these videos that I'm posting on YouTube channel. It's more tailored toward you and what you may need. So again, you can reach out to me by private message on Facebook, or you can leave a comment on my group on Facebook or this channel here on YouTube. So today, let's get started right away. One of the reasons why I want to teach on these concepts is because I have a lot of experience and I know exactly what it is that you guys need to know in order to succeed as accountants or bookkeepers, and just things that will help you out. Some of the first skills that I'll teach you guys will be more of the basics, but we'll get into more complex areas too, where it could help out accountants at all levels. So today, again, is going to be on the balance sheet. It's going to be on the income statement and some basic entries regarding, like, if certain amounts hit a bank. So let's dive into it, and we'll take it over here on this side. And so let's talk about the balance sheet, right? So the balance sheet basically is going to be composed of assets, liabilities, and equity. You call it owner's equity. And so basically on a balance sheet, and we'll expand that there, the balance sheet's going to have a general rule. And that rule is that, we'll do it down here, assets equals the liabilities plus the equity. So on the balance sheet, that is always going to be true. If you ever have assets that are more than the liabilities and equities, or less, or maybe it's the other way around with the liabilities and equity that kind of out of order, if that doesn't equal as it shows you here, then something is wrong. So typically speaking, on software, they look out for that, so that way that's not the case, or it's booked correctly on there. But it's something that you need to know as an accountant to always look out for, to make sure that the assets is always equal to liabilities plus the equity. So let's talk about like debits and credits on that, because I think that a lot of times today with software that accountants need to have a little better understanding about what's happening with debits and credits, if it's increasing or decreasing these particular categories. So let's increase this cell range here. I'm doing this in Excel because I love Excel. If you're an accountant or bookkeeper, you're definitely going to be working in Excel. So I just like to teach in Excel. I just think it makes it easier for us to see it and understand it. So here's the assets, right? Well, what is going to increase the assets? Is it going to be a debit or credit? It's going to be a debit. A debit to the assets is going to increase the asset. A credit is going to decrease that. Now, liabilities it's going to be the other way around. And same thing with the equity. Oops, all popped up there. Liabilities is going to decrease with a debit, and the equity is going to decrease, and it's going to be an increase if you credit and credit the equity. So once again, assets, a debit's going to increase the assets, but for liabilities it's going to decrease it, and same thing with equity. But a credit's going to decrease the assets, it's going to increase the liabilities, increase the equity. So it's very important that we understand that basic concept, because you're going to see it down below where we do examples where we need to make sure that we get this booked correctly. So let's do example. And one of the things I'm going to do to teach you guys examples is I'm going to give you a little bit of wiggle room, a few seconds, 5 seconds, 10 seconds, and maybe quickly jot it down, or you can even pause this video, where you can try to see if you can figure it out. And I think that's the best way of teaching, kind of taking the first example and see if you can understand about what you should book for the entry, and then you can unpause the video and see what the correct answer is. And so I think with my tutorial videos we'll kind of do that, and I'll let you guys know when you guys can pause it and we'll start filling it in. So here's our first example. Example 1. Say your client receives a deposit for $100 for a product that was sold, say 2 months ago. Okay, so here again we're going to do the debit and the credit. And before I even fill in any categories, pause the video and see if you can correctly fill in what the correct debit's going to be and what the correct credit's going to be. Let you pause now. Okay guys, I'm going to pick it up here. Hopefully you paused and check that out. So let's do this. So it's going to affect the cash, and it's going to impact the accounts receivable. Right? So if we have sold a product and we're getting money in, well, that's going to increase our assets. Our cash is an asset. That's going to increase that. The accounts receivable also is an asset, but the accounts receivable is going to be going down by 100 because we're now taking that off the accounts receivable books. Now, one of the biggest values, but guys, by the way, of taking my tutorial videos, by understanding it, watching my content, is I'm going to take this one step further. When you guys are running aging reports, and this is going to be an AR aging, what that's going to do on the aging report is that you're going to have that product that's going to be outstanding for, we'll say we'll make it easy. Say that this was sold 2 months ago. So here we'll say it's right on the cusp, 60 days old. So on the AR aging, before this transaction happened, we'll say that this was somewhere within 60 days, maybe a little bit less than that, of course. This was on the books for $100, that you needed to collect that money. What that's going to do is when you finally book this entry on the accounts receivable, that's going to take it off your aging report, so that way it's no longer there. So that will of course be zeroed out, and you're going to be okay on your accounts receivable. So I tell you guys that when I was in accounting and learning accounting concepts, like these two weren't always, I mean, I knew about the aging and I knew the AR aging and the AP aging, but I never kind of put the two together with like, okay, when this transaction happened, what is it immediately doing to the aging? And I think it's helpful to kind of point that out for you guys so you guys can understand what's going on. Because if this transaction didn't happen again, it would still stay on the AR aging report, and you should see that as an outstanding item. So great, guys. I hope you guys got that example correct. Let's make this bold so we can kind of see it. Oops. Sorry, I'm used to I work on Mac, and I'm used to the controls on a PC, so sometimes that happens. Okay, let's go down to example number 2, guys. Okay. Hope you guys got it right. Give yourself a star, a pat on the back. Yay! Example 2. Okay. We'll do this, and we'll tell you guys to pause it. Say your client has a bank withdraw for $100, right? Okay. So if your client has a bank withdrawal for 100, what is going to be the debit and what is going to be the credit? And I'll put this down here. Okay, guys, this is where you guys are going to pause it, think about it, and then let's get that all spelled out here. Okay, pause the video right now. Okay, great, guys. I hope you guys did that action because it's important you guys first take a gander at it. So so it's a bank withdrawal, so we're obviously going to have cash, right? So what's going to happen to the cash? Remember up here, the asset's going to be decreased. You're having a bank withdrawal. You're paying something off. So here is going to be, and we're going to say this is a bank withdrawal that immediately happens, and you're going in. Usually, like if you're working off of QuickBooks, it's asking you within the system, okay, what is it you're cutting this to? And so what it asks you to do is, what is the expense account? So it's going to expense that $100. Right? So for the expense account, expense is and we'll do this over here too. We need to get this so we understand this. Is going to be on the income statement. Income statement, we're going to have what? Revenues and expenses. And we're going to have a debit and a credit, right? So the revenues are going to decrease with the debit. Oops. And expense is going to decrease with a credit, and revenue is going to increase with credit entries, and expenses are going to increase with the debit entries. Okay, so it's important we understand what's going on down here. Now I know some of you might think, well, you know, there's an accounts payable function that's happening too as well. Maybe that you had written that part out. That's true. There is accounts payable because the AP aging is going to be impacted too. You're paying off a bill, but we're saying that transaction's already been booked. We're saying here, for the purpose of when people utilize QuickBooks and going through and coding entries, I just want you to know what QuickBooks usually is doing. And other accounting, I use QuickBooks as an example, but there are other accounting softwares out there that basically do the same thing. They're basically crediting cash and saying, where is this expense going to be booked? You had a withdrawal for this. What kind of expense is this? Is it office supplies? Is it utilities? You know, things of that nature. So I just want you guys to understand that typically speaking, when you're doing the entry, that's what what you're looking at. You're decreasing the cash, the asset, and you're increasing the expense account. Hope you guys got that right. Give you guys another star, and I hope it turned out okay for you guys. So let's take it for another example. Okay, we'll make this our final example for today's video. We're trying not to make today's video too long for the accounting concepts. So let's see if you guys can get this one right. Okay, we'll make this a little bit trickier. Okay, so here, guys, your client has a bank withdrawal for $1,200 for a bill that's spread over 12 months, right? We're going to have a debit and a credit, okay? So I would give hints here, but maybe it's not best not to do that. Let's just see how you guys do on this one, okay? So pause the video, guys, see if you can figure out this one, and then we'll hit play and take it forward. Okay, guys? We'll take it forward. Before we move forward on this one here, again, the impact of this one too, I mentioned the AP aging part on this too. That one will be impacted. As I said before, there is an AP aging. When a bill is paid, that will be taken off the AP aging as well. So that would be zeroed out too as well. So just want to let you guys know that I covered that piece of it too, that when bills are paid, their AP aging is going to be impacted as well. So I'll let you understand that. but that's going to be the basic entry that you're going to make sure you booked for the example 2. For example 3 over here, again, your client is a bank withdrawal for $1,200 for a bill that's spread out over 12 months. Okay, guys, so let's talk about this. What's going to happen here, right? So once again, this is hitting the bank account, and your cash is getting taken out. So remember what happens up here. It's an asset. We're decreasing our asset. So right off the bat, $1,200 is taken out. So the cash is automatically withdrawn. But there's something called a prepaid asset, right? And the prepaid asset for this is, and for this example, guys, what I'll do is I'll spell it out here. We'll say it's $1,200. That's a prepaid asset that it's hitting. That you're basically getting this asset that's going to be spread out over 12 months. Now, we'll say that this is month 1, the first month. So basically, there's going to have to be a prepaid entry. We'll say month 1. That is going to reduce that prepaid asset by $100 because it's spread out over 12 months. So it's 12 divided by 1,200. So it's $100 every month. And you're going to have the expense account. Because you're increasing the expense account by that $100. Okay, it's a debit. Okay, so that is in month 1. Now, you could have had this within the same entry, of course, right? Like the prepaid asset could have been $1,100 and the expense account is the $100. I just wanted to kind of show you first kind of what's happening up here, where you have the cash that's being reduced by $1,200, but the prepaid assets is accounted for by a debit, which again is increasing. That's an asset account. It increases your asset account by $1,200. And we're saying that within this first month, which is hitting right away, we're hitting the prepaid asset account, reducing the asset account by $100 and increasing the expense account by $100 for whatever category that is. It could be insurance. It could be some utility bill that's paid way out. Who knows? It could be a number of things that you're hitting for the expense account. So guys, there you go. Those are 3 examples over there. Remember, again, the basics over here. So we hit the expense account. So the expenses, we show that that is a debit. So again, for the expense accounts, that's increasing the expenses by a debit. It would be a credit would decrease that account. Revenues, it's the exact opposite. You'd increase it with a credit, decreasing it with a debit. And so, guys, it's just really important that you understand these fundamentals. I understand that accounting software, it kind of sometimes is behind the scenes, that you're not sure, you don't really see these debits and credits that's happening. But it's really important to understand the fundamentals, especially when you're generating balance sheets and income statements to understand what's happening. Because if something happens within the system where it doesn't seem right, you need to understand the fundamentals about what the system is doing, that this is the basics of it. So it just will help you out with your clients, to help you out and explain things, especially when you ask for variance reports and other things like that. Balance sheet and income statements have to be printed off per month for the client, so that way they can understand what's going on. And so if there's ever a variance in what's going on, sometimes you have to kind of delve into more of the finer details of what is going, especially for prepays, right? I get asked on my clients all the time, hey Vince, is this spread correctly? This is a bill, is this, is the accounting behind this, the calculation behind this, is this correct for this particular client? So that's something for the more complicated concepts, you're guaranteed to have to look into to make sure that that bill is spread correctly, coded correctly, and that way you're hitting the right accounts. So that way that your client has financial statements that is in line with what they need to be reporting on. So guys, this is, and by the way, I'm based here in the United States. These are basic accounting concepts here that apply here, but they do apply for other areas in other countries as well. Do catch up, if you're happy to be based in a country that, you think that there could be difference in rules, obviously look into that. And even here in the United States, if you find a different method of reporting, look to see if that's best for your particular area, particular state. But these are tips and tutorials that are designed to help people out to understand the basics, so you can understand what's going on with that. So again, guys, this is my very first accounting tutorial video. Again, my name is Vince here, and if you want more detailed for yourself personally, again, tips on getting clients and all that, again, you can contact me by personal message here on Facebook or my group or channel that you guys can see my regular postings. I will have more tutorial videos for you guys for accounting, sometimes getting into a little more detailed areas. And I will have ones where I describe on balance sheets and income statements, kind of showing the categories of all that. That's really, really important when you're doing remote accounting, to understand the basics of balance sheets, the basics of income statements, not just this part of it, but about what makes up these categories and how to properly record things, and make sure that, if you're doing income statements, for instance, as I mentioned before, that you do month by month comparisons, that you see all that. So we'll do tutorials that kind of do more involved showings of that as well, so you guys can see that. But we'll wrap up today's video, guys. Thank you very much for joining me. I hope this has helped you out. I hope you guys got all 3 of these right. Again, give yourself an extra couple stars if you did. You're right on track to understanding accounting, doing well in accounting. And I hope you're doing well with your clients and out there. And feel free to like this video, hit subscribe on this channel if you've liked this too as well. And guys, we'll take a gander at the next accounting concepts, or even Excel concepts. By the way, if I posted Excel tips as well, you'll see that in this channel. It's all about helping you guys out as accountants or bookkeepers. Take care, guys.